Okay, everybody. Well, let's start with the ugly stuff first. MongoDB. I have 30 different bearish positions. One of them is MongoDB, and it's the #1 gainer after hours, which for a person who owns puts is not a good thing. See, even my dogs are upset. They're furious at this. And my first reaction was, well, I guess I'll dump them for a loss in the morning. I might. On the other hand, I might just buy a bunch more because, first of all, they're February's, and secondly, on this scale, it's dreadful. Obviously, my options will probably fall 50 or 60% the moment the market opens tomorrow. But I got to tell you, looking at the long-term chart of MongoDB, it is just as beautiful a topping pattern as ever. This chart doesn't reflect after-hours trading. I think we're trading up around here somewhere. But I will see. I will see. I know averaging down is usually, what does Paul Tudor Jones say? Losers average loser, something like that. To be determined. So suffice it to say that the delicious profits I've enjoyed yesterday and today will get taxed somewhat tomorrow morning because of MDB. But I tend to keep my positions pretty even. So since this is 1 out of 30 positions, it's about 3% of my overall portfolio. So if it falls by half, then I'll get clipped for 1.5%, and I will struggle through somehow with that. So there we go. So that's the ugly stuff. We got that out of the way. MongoDB did not perform. But what else is cooking? Let's just talk about the ES. And let's dial it back a little bit. And let's go back to the wee hours of this morning. So Monday was a good day because we went bloop, 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 bloop. And I had a little bit of a counter trend, just a little bit of a bounce. But on the whole, Monday was a nice down day. And the market closed. And it meandered, didn't do anything. And I was kind of wondering if we would just be, unchanged for the next 3 days until the next economic report came out. But that was not the case. So I woke up super, super early, even for me. And things were up a teeny bit, but it was pretty inconsequential. Crude oil was down, which was nice, but nothing was really going on. But once the market opened, it didn't take long before we sliced through the trend line with a capital T. And the really cool part is, this is just remarkable to me, this trend line is the one that goes all the way back to October 13. We broke it, retraced, and God bless, it kissed it goodbye right there. I love that. That is amazing to me. And once it kissed it goodbye, it was like, wow, down it went, and it bottomed about 90 minutes before the close, and then it started to recover. So that's all well and good. It is very easy to get spoiled by this. I've had 2 dynamite days. Thanks to MongoDB, I've settled down and understand that you can lose money too. But let's just pause and reflect on things from a non-1 minute bar perspective. Here is pretty much most of the year. And the most recent events, as I pointed out many times, is we tagged perfectly the underside of this trend line and it was repelled. And the great news today, and this is the big news, is that we broke this trend line. So, okay, fine. What's next? What happens now? Well, whereas before I was concerned about resistance here and support here, that's changed. Now, my concern is support here, which is at something like 3,900, I think. I think so. Let me take a closer look. It's not exactly 3,900, but it's awfully close. So this line that I've drawn is at 3,912. So we'll just keep life easy. We'll just say 3,900 because that's a nice big round number that people love. And so that to me is support. Because last night I said again and again, we must break this, we must break this, we must break this. Well, we broke it. Now, we must break this, we must break this. This is the next thing to break, 3,900. So that's support. That's what we need to break. As far as resistance goes, what if we rally tomorrow? What if everyone decides MongoDB is representative of every company on the planet and things are great? I would say the underbelly of this trend line is what's key. This has changed from support to resistance. And where that will fall I don't know, how high might it go? Looking at this from this perspective, something like, well, let's go back to our big round number thing, something like 4,000. That's a little high, but something close to 4,000. Like, let's say went shoop, 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 somewhere around here. Because not only do we have the big round number phenomena going on, but we've got all this overhead supply. So that's our battle plan. 4,000 on the top, 3,900 on the bottom. And it's a little tighter than 100 points. It's really more like 39.14 on the bottom and 39.95 on the top, something like that. But you get what I'm saying. While we're in the neighborhood, I don't know if I have anything pithy to say about anything else, but let's just look at a couple of other things. Yes, I'm feeling pithy. Okay. So here is the NASDAQ. And this is pretty cool. So here, of course, we have the trauma that took place on November 10. That was the prior CPI. So this was the prior trauma from that. And that's what made November stink. And once we vaulted into that, shortly thereafter, we went range bound. The bottom of the range around 11,465 and the top of the range around 12,118 with a teeny tiny little bitty overshoot, which isn't even worth noting. Like measured in minutes. So pretty wide range here. We are near the bottom of this range. So what if we rally? Well, I think the next meaningful level is as plain as can be, which is right here at 11,734. You will kindly note what happened today. Check it out. This corresponds precisely to that broken spider trend, the S&P trend line I was talking about. This one happens to be horizontal. We broke it, retested, and then fell. I don't even remember what this line represents. Let's back way up. Oh, okay. It represents this pattern. So that's pretty damn cool. So here is the bullish pattern, and here is this indecisive monkey business going on to the right of the pattern. It hasn't been able to achieve a breakout, and it hasn't really been able to break down. It's gone into this queer jail cell. It started to break out, and that stopped on November 15. And so it's, it was like up and down and up and down and up. You fill in the blank, down, right? So to my way of thinking, I'll be honest with you, I think it's more likely we're going to rise tomorrow than fall, which I don't like because I love down days, one after the other. But I think it's going to rise. And if it does, I think that's the key level to watch right there. One last one, the Russell. Yeah, this is probably the least interesting, but it's still kind of interesting because let's make this a 1 hour chart. This one has its own little jail cell. Same idea. We had our November 10 thing here, and we've been range bound. What's kind of cool about this is that it's already broken support. So unlike the NQ, which is kind of equivalent of like being up here, this one has busted below it. And so if we are not too strong tomorrow, we may just find resistance right here, perhaps. So anyway, it's been 2 terrific days. Like I said, I get very spoiled by this. I hate the prospect of having to grit my teeth and, go through a nasty session, but we could have that. And setting all that aside, the big kahuna is next week. Tuesday, CPI, Wednesday, FOMC. But until then, we'll just do the best we can. Thank you, and I'll see you on Wednesday.